In this video, I'm going to teach you a stress-free strategy to get funded using a high time frame entry technique, all while keeping your 9-to-5 job and maintaining your busy lifestyle. Make sure you stick around till the end of the video because I assure you, you're going to want to digest every bit of information that I'm about to share. Let's get into it. All right, everybody, I'm here to tell you that full-time trading is a myth. It's a term that's thrown around a lot on the internet. Everybody wants to be a full-time trader. They want to quit their job and go full-time trading. Let me tell you, that dream is not what it's cracked up to be. I do have the luxury of being a full-time trader. It wasn't always the case. Many of you don't know this, but I actually was a Finnish carpenter for 10 years of my life. For 7 of those 10 years, I actually owned and operated a residential Finnish carpentry business in my local area with employees, clients, suppliers, accounting, the whole thing. And I managed to be a trader during that time as well. Now that I have sold that business and am technically a full-time trader, I look back on that experience and think to myself, I actually had it really good. You don't need to be a full-time trader. In fact, less is more when it comes to trading. Now that I have the ability to be at my desk at any point in time that I would like and technically trade any point in time that I would like, it's funny, I find myself stepping further away from trading and gravitating more so to higher time frames because it allows me the freedom that I've always craved. So one of the myths that I would really like to break down in the trading industry is that you need more trades to be more profitable, or you can't be a swing trader and pass funding challenges. There are so many misconceptions when it comes to swing trading and higher time frame trading in general. I feel that it's my duty to break down some of those barriers because I'm experiencing it firsthand, and I'm telling you guys, the things you hear on social media are simply not true. You don't have to be an intra-session trader scalping the 1 minute or the 5 minute time frame just to pass a funding challenge or just to be profitable long term. In fact, the opposite is quite the case. If you have, the typical 9-to-5 job, I'm sure you're familiar with the fact that you will have a hard time trading, the London session or the New York session based on wherever you are in the world. Most traders get into trading while they already have a job, as they should. So it's of course going to be very hard to be day trading a specific session or lower timeframes in general. And that's why for people that have, the average 9-to-5 job or a busy family life, or for that matter, just other endeavors that they're interested in, I always recommend swing trading. So what I'm going to do in this video for you all is break down a daily time frame strategy. It's actually the exact same strategy that I've been teaching on this channel for a long time now, but it's applied to an even higher time frame. Usually I'm stuck on the 4-hour time frame. Now I'm going to show you guys entries on the daily time frame that you could easily get funded with. The examples that we're going to go over today, I truly hope they're going to open your eyes to different possibilities, because a lot of the trades that I'm about to share with you today, the examples that we're going to go over, they're going to show you that each phase of a funding challenge can be passed within a few weeks, 2 or 3 weeks per phase on average. I think this is really going to open your eyes, so I'm excited to share this with you all. So without further ado, let's dive into these examples. So the first example we're going to look at today is USDJPY, and again, it's on the daily time frame. Now, before I dive into the reasoning behind this trade, let me actually use the measurement tool on TradingView to show you how long this trade took from start to finish. So if I click it around the entry, and then drag it to where the trade hit take profit, that's 11 days. This is a 1-to-3 risk reward ratio trade. If you trade like me and you set your limit order at the 75% retracement level of the bullish range in this example, your stop loss is at the swing low and take profit is at the swing high, that gives you a consistent 1-to-3 risk reward ratio every time. Now, before we dive into the reasoning behind this trade, let's talk about the mathematics behind funding. So for live funded accounts, I would never recommend risking more than 1% per trade. However, with challenge accounts, I think it's more than reasonable to risk 2% per trade. And that's personally what I do, and it's done very well for me in the past. So it basically just gets it over with faster. It's just a challenge. It's just a demo account. Don't put it on a pedestal. Don't make a big deal out of it, right? Obviously, buy a challenge that you can comfortably afford to lose. But at the end of the day, we don't want to be trading this challenge for 3 months, 4 months, and not making any progress. Like, that's a lot of wasted opportunity, and time opportunity is extremely valuable. So for me personally, I recommend doing 2% risk per trade on challenge accounts. Given the fact that we're risking 2% on a challenge account and each trade is a 1-to-3 risk reward ratio, technically speaking, you only need to win 2 trades to pass each phase. Not even 2 full trades, like 1.5 trades basically at 1-to-3 risk reward ratio. So if you think about it that way, it's actually really funny. You only need 1 or 2 profitable trades per month and you're good to go. With most evaluation firms right now, the targets for phase 1 are typically either 8% profit or 10% profit. And phase 2 is usually 4% profit or 5% profit. So again, using this strategy 2% risk with a 1 to 3 risk reward ratio, it can actually be achieved very quickly. My average for passing a challenge is 3 weeks per phase. And keep in mind, these prop firms don't have time limits anymore. That is a thing of the past. So there's really no stress here. We don't want it to take too long, but we can also just relax and know that we can take our time and look for the most A+ setups and just risk 2% on those setups. And if you do that consistently without getting shiny balled by other strategies, then you'll quickly see success with this. And you'll quickly realize that 90% of the trading industry that you see on YouTube and Instagram and other social platforms is all nonsense. All of these people who are scalping the lower time frames, it might work for them, but I don't think many of them realize that it doesn't work for the vast majority of the trading population. Most people have a family to provide for. Most people can't be sitting on the charts all day. Most people have a job to go to. And my last point on this is that it's good to have a job while you're trading, because having other sources of income actually greatly reduces the stress associated with trading. It makes it so you're not so dependent on trading. If you had to rely on making a profitable trade to pay your mortgage payment or to pay for your car or to buy groceries so your family can eat, my goodness, that would be stressful. I can't even imagine. That's why I don't think most people understand, like, you don't actually want to be a full-time trader. That would be a really miserable lifestyle. I'm an advocate for having a 9-to-5 job. Any supplementary income that you can have with trading will make your trading easier. It will make your results better over time. And most importantly, your mental state, your mental health is going to be good and consistent for the most part. So enough rambling on my end. Let's dive into this actual trade here. I want you guys to understand how simplistic this setup is. Looking at USDJPY, I'm going to use the replay tool because price has gone pretty far ahead. So I just want you guys to focus on this example here. So the Currency Pros indicator is showing all of this for me, so I don't need my own annotations. Price made a swing point here, a swing low, and then impulsively pushed up to the upside and then printed 2 swing highs, but this one is the higher one. So clearly there's a break of structure right here as the indicator has presented. And prior to price retracing into my 75% entry area, there is a significant imbalance between this candle and this candle right here. Obviously now that has been filled, right? And that's what I'm looking for when I'm analyzing potential trading opportunities. I'm looking for an impulsive movement that contains an imbalance because I know that it's highly probable for price to retrace back into that region. And as long as that region somewhat aligns with my 75% entry point, then I'm happy to take that trade. So this is a great example of that. And keep in mind, we're on the daily time frame. So this is a very highly probable setup. It checks all the boxes on my list. You can just simply set a limit order well ahead of time. Let's say price was back here when you spotted this opportunity. And now the indicator is showing us this imbalance prior to it being filled. So at this point in time, or any point in time prior to the entry being triggered, you can simply set a limit order. So think about that for a second. You have a busy lifestyle, right? You have to wake up early to go to your job. You come home and spend time with your family. Let's say you spot this opportunity late evening before you're getting ready for bed. You just spend 15-20 minutes on the charts scouting potential trading opportunities and you spot this one. All you have to do is simply set a limit order and then go to sleep and then go on about your life the next day, go to work, spend time with your family. And while that's happening, while your life is continuing, this trade is playing out and bringing you one step closer to being funded and creating a new source of income for yourself to supplement your job and to supplement your family. So this was a really interesting example because it was just so textbook and so straightforward. So I hope it provided some value for you all, but we're just getting started. I have many more examples to show you that are going to depict this strategy in a new light for you and hopefully open your eyes to the possibilities of higher time frame trading. And as you can see, the Currency Pros indicator is plotting a new potential opportunity here on its own. So we have a clear break of structure, clear imbalance here within this impulsive move, and we have our retracement level automatically plotted for us from swing low to swing high. The only thing is this opportunity is not solidified yet because price could keep going higher up. So there's no solidified swing high just yet. As soon as price begins retracing to the downside, you can just repeat the exact same process as you did here. Set a limit order and just wait and see what happens. It's as simple as that. This is not a 100% guaranteed strategy. You of course will take losses. We're not always correct. No strategy ever is, but this wins a lot more than it loses. From my back testing, it should be anywhere between 40 and 60%. That of course is based on the specific confluences that you have. It is more so based on your experience in the market because as mechanical as this strategy is, there's always going to be a certain level of discretion involved with trading. And that discretionary trading comes from experience. It's simply something that cannot be taught. So I can teach you all the mechanical rules. I can give you the blueprint, but you need to spend time with it. You need to be back testing, forward testing, demo trading, and eventually live trading and journaling throughout that entire process in order to fully grasp the strategy and get the best results out of it. Now, without further ado, let's dive into some more examples. All right, so we're now taking a look at GBPAUD on, again, the daily time frame. So this is a really interesting example, and I'm excited to break this down for you all because the two trades you're seeing here, if you apply the risk management strategy that we just talked about in the last example, these two trades are an entire phase of a funding challenge passed, right? So they're 1 to 3 risk reward ratios each. If you're risking 2% per trade during the challenge phase, as we talked about previously, these two trades will pass your challenge. 2% per trade, that means each win represents 6% gain. You wouldn't have even had to complete this second trade in order to pass phase 1 of your funding challenge. Now, the next thing I'd like to do is, again, go back to the measurement tool and drag it from the beginning of the first trade to the end of the second trade. As you can see here, that only took 16 days. So in just over 2 weeks, you can visually see that it was very possible to pass the first phase of any funding challenge. Now, with that being said, I hope you can see by now that you don't need to be an intraday trader. You don't need to be an intra-session trader. You don't need to be a scalper. You don't need to look at lower time frames at all. You can literally stick to the daily time frame. Now, me personally, I like to use the daily and the 4 hour. That's just my personal preference. However, I can honestly say in the future, as time goes on, I can certainly see myself just shifting to the daily time frame permanently and just going on about my life, you know, starting new businesses, traveling, creating more memories, having more endeavors, not being glued to my computer screen. So I really hope this is opening your eyes to new possibilities. Now, with that being said, let's dive into these examples one by one. I'm going to utilize the replay tool so we can focus on each individually. And I'm going to just hide the drawings as I go because I want you guys to really focus in on each trading opportunity here. Looking at the price action here, it is a bit choppy. Actually, if we zoom out a bit, price was clearly bullish for quite some time. However, the reason I would have a short bias here is because we're seeing the warning signs of a potential reversal. And that is in the sense of minor lows being broken here. So although the structure settings on my indicator are set to very, very high, so it shows me the swing structure, I'm still able to identify those lower points being violated. Now, if I were to alter the settings on my indicator, it would show me the more minute structure details such as that, but I choose to focus on the swing points. So this was the first trading opportunity. I'm actually going to use the replay tool to bring it back a bit further before it tagged into that trade, just so you can all see the imbalance. So let me zoom in a bit. This is the main draw for me, the imbalance. Some people call it a fair value gap. I call it imbalance. Same thing. It's a gap in price. It's a 3 candlestick pattern. So between the low of this candle's wick and the high of this candle's wick, we have a gap there. We have a big impulsive move that created imbalance. That is the main thing that I look for price to draw into. And as long as my retracement level is close to that, I have a good chance of being tagged into my trade. And as long as my directional bias is correct, then I should theoretically have a winning trade. I put my stop loss at the high, I put my take profit at the low, set the trade, and forget about it. So what happens next? Let me play it forward. Got tagged into that trade. As you can see, it tapped into this, what could be called an order block up here, filled the imbalance entirely, and then went straight to take profit. Now let's measure that trade individually, actually. So that trade happened very quickly in just 2 days, approximately. Just think about that for a second, guys. Risking 2% on this, it's a 1 to 3 risk reward ratio, and you could gain 6% in just 2 days with this opportunity alone. That's a big deal. Think about if you're in phase 2 of a funding challenge. As I said previously, most prop firms require either 4% or 5% as a profit target in phase 2. This one single trade would go well beyond that and pass you your funding challenge, and you would be live funded. Now, playing price forward, as you can see, we violated this low now. So that's a new break of structure. So let me hide this now, and we can search for that new opportunity. Let me go to the object tree and just find the correct one, which is there. So again, because we have a new break of structure, price violated that low, that means we can now look for a new opportunity. Does this opportunity have imbalance? Yes, it does. The Currency Pros indicator is showing that gray box right there, indicating that between the low of this candle and the high of this bullish candle here, there is a gap in price. So that's the imbalance or fair value gap. So again, that's the main draw that I look for. We have structural confirmation and we have the draw for price to go into, which is around the 75% retracement level. Now keep in mind with the retracement level, you can set this to whatever you want. So let's play price forward. Again, tagged in to the 75%. That was a really good entry. And it goes pretty much straight to the take profit. Now this trade, let's measure this one. This one took a little bit longer, 7 days. So a full week. Think about that, 6% profit. If you're risking 2% on this 1 to 3 risk reward ratio trade, 6% profit in 7 days. Some people don't make 6% profit in an entire month. And these are 2 back-to-back examples of 6% profitable trades. That's 12% in the course of 16 days, I believe it was. Let me just double check that. So in the course of 16 days, these 2 trades, 12% profit if you were risking 2% per trade. Now on a live funded account, even if you're just risking 1% per trade, this is still 6% profit in the course of 16 days. That's incredible. You could just call it a month, take some time off, not look at the charts at all, have that peace of mind, and go on about your life. This to me was a really eye-opening example to go over for you all, and I really hope you all gained something from it. Now we're gonna discuss one more example before we close out this video, so stay tuned till the end. You're gonna want to watch it. So once again, we have another very clear opportunity here on NZD USD on the daily time frame. We can see the Fibonacci range drawn in front of us from this swing high down to this swing low. Now in terms of imbalance, we have an imbalance from this candle's low to this candle's high, and then another imbalance from this candle's low to this candle's high. So 2 right there. This one has obviously already been filled. Let's disregard that. The important thing is that we have one in the general area of the 75% entry, which is my personal preference. Again, you can set this to whatever you want. It could be 71, 67. You could go even higher to 79 or 80, something like that. You have to figure out what works best for you, but we're checking things off the list here. We have imbalance. We have a clear impulsive move to the downside. The break of structure was obviously right there. What we can do now is set a limit order. Imagine you're doing this in real time, right? You're seeing this opportunity at a time where you're available to view the charts, you know? Keep in mind, even if you're not available to view the charts right before the entry, I'm sure you would at some point, because these are daily candles, right? That's 1 day, 2 days, 3 days, 4 days, 5 days. At some point in time, after these swing points were solidified, you would have some time to identify this trading opportunity and set a limit order. It's very straightforward. So you simply set an order at the entry point, the 75% or whatever you prefer, put the stop loss to the swing high, the take profit to the swing low, and for me, that represents a 1 to 3 risk to reward ratio. Now let's play price forward. So that's about as sniper as an entry as you get. That's pretty crazy. Honestly, it depends on the broker. On this one, you might not have even gotten involved. I'm not too sure because that's pretty crazy. Let me just zoom in on that a little bit. Yeah, with a really good broker, you'd be tagged into this one. Oftentimes with the 75%, I do get missed. So I'm even considering switching back to like the 71 or something in the near future, but we'll see. I'm happy with the 75% for now, but occasionally I do miss a trade, which is a little bit frustrating, but it is what it is. So in this case, you may or may not have gotten tagged in there. I would hope so. But regardless, the technical aspect of this trade remains the same and it's valuable, and I would like to talk about it. So very distinctive break of structure to the downside, very impulsive move to the downside, left behind significant imbalance. The imbalance was located at the retracement level, and price mitigated that perfectly and melted to the downside. Now, something interesting happened here though. We pushed down almost towards the take profit, like it was so close to getting there, and then it retraced all the way back up almost to the entry point. And of course, after that, it went to the take profit. But I wanted to briefly discuss management techniques here, especially on the daily time frame or even the 4-hour time frame. Sometimes these trades last a couple days, sometimes they last a week, sometimes 2 weeks. It really depends on the opportunity. There's no crystal ball telling us how long it's going to be. So in terms of management, the thing that I would recommend the most is just simply moving your stop loss to break even after a certain point in time. Now that point in time is going to be up to you. It could be after 1-to-1 profit is achieved. It could be after 1-to-2 profit is achieved, and then you move your stop loss to break even. Whatever it may be, I think that that is a beneficial thing to do. I'm definitely a big advocate for the set and forget management technique, which is literally just doing nothing. Like you enter the trade and just let it do its thing. And there's no debating that over time, that's the most profitable thing to do. However, in terms of mental health, I think that it's very beneficial to have some form of trade management. Now, for me, lately, I've been just moving my stop loss to break even more often. I'm not an advocate of taking partial profits. I really can't recommend taking partial profits. There's a common saying that nobody's gone broke from taking partial profits. Like, it's always good to pay yourself. I get that. But the thing is, it skews your numbers over time. If you're taking partials, that means that your wins are smaller than they should be. So for example, with a 1-to-3 risk reward ratio trade, if I were taking partial profits at 1-to-1, more partial profits at 1-to-2, and then final profits at 1-to-3, I wouldn't have made a successful 1-to-3 trade. It would be significantly less than that because of how much I've diluted my position size over the course of that trade. So I can't possibly be an advocate for partial profits. I'm sure some will disagree with me on that, but I'm not here to argue with anybody. I'm just simply sharing what works for me and my insights that I've gained over the past 6 years of my life trading the financial markets. So in this example, it would have been great to move to break even after all of this profit was occurring. So if you moved it to break even, I mean, this wick got pretty close here. It's hard to say what would have happened. Most likely you would have been kept in the trade. I think it's a good enough distance away from the entry point that you would have been in the trade still. But even if it was a break even, that wouldn't be that big of a deal. There's been a lot of occasions where I've been doing this set and forget method, and this situation would happen. It would come very close to take profit and then do a 100% reversal, except it would continue and then hit my stop loss. And that's where it becomes unacceptable. It's unacceptable to be, this close to take profit and then eventually take a full loss. That's just crazy. So those are the types of situations that I would like to prevent moving forward. And that's why I've implemented the more of a break-even strategy after a certain point in profit. So sure, in certain scenarios that could be, me shooting myself in the foot, missing out on profit, leaving money on the table. But more often than not, I think from a mental health standpoint, it would be advantageous to move to break even if you get stopped out and then it goes in your favor. At least you didn't lose money. Like, there's something to be said for the state of mind that having a risk-free trade puts you in. When you've achieved a certain amount of profit, the trade is looking healthy, and you move to break even, that's the best feeling. What's even more important than that is when you remove your risk from that position, that frees you up to use that initial risk on a new position. And that's when things can really start compounding and moving fast in terms of you scaling your capital or getting prop firm payouts. If you're risk-free on the first trade, it opens you up for either scale-in opportunities on that trade or an entirely new trade idea on a different asset. I hope this example provided some insight for you all, and I hope this video in general provided a lot of insight for you all and hopefully opened your eyes to new possibilities. This is a style of trading that I have adopted for the past year or so. During my time in the construction industry, I was trading higher timeframes, but I was also trading lower timeframes. I didn't really classify myself as a swing trader or a day trader. I was just basically taking opportunities, and back then I was very multi-timeframe based. So I was just kind of open to anything that fit my strategy. But as time goes on and as I mature in my trading career and gain more experience, I realized that it just kind of naturally shifts and gravitates towards a higher time frame style. When I first got into trading, obviously I had monetary goals, but the main goal was freedom. That's what I've always desired in my life. That's why I started my own business in construction to begin with, because I wasn't a good employee. I didn't do well working for people. I like my freedom. I don't like being told what to do. So that's always been the case for me. And that's why I got into trading too, because I don't answer to anybody. I don't have a boss. Over time, I had to remind myself, like, this is why you got into trading, to have freedom. So there's no freedom in being glued to the charts for 4 to 6 hours a day, trading a specific session, taking 2 or 3 trades in a day. There's absolutely no freedom in that. I understand some people may want to do that for a short period of time to build up some capital, but if I've proved anything in this video, guys, it's that you can build up capital and pass prop firm challenges and fund your personal accounts and be abundantly successful in the Forex market or other markets as well, just the financial markets in general, by utilizing a higher time frame strategy and actually spending minimal time at your computer. When it comes to trading, less is truly more. It's one of those things in life where you can't work harder for it. There's no such thing as working harder in trading. And in fact, if you try and do that, it can actually be quite detrimental to your results. Truly, less is more. When you try and force trades, those are usually the worst losing trades. I would go a step further in saying that the swing trading lifestyle is so beneficial for your mental state that it actually subconsciously opens you up to visually spotting more opportunities on the charts. Like, I notice a significant difference in my trading abilities when I'm stress-free. you should all know this, even if you're not swing traders. When you're stressed, it's actually very difficult to trade properly. You find yourself looking to force trades and feeling all of the negative emotions that, traders typically warn you about, right? So when it comes to swing trading, I have such freedom and such peace of mind, and it takes such little time, like literally 15 to 20 minutes a day of my time, that I'm actually much more susceptible to spotting good opportunities because I'm not in a rush. I'm not, showing up to my desk saying, I have to work, I have to do this, I have to do that. I'm in like a flow state. I show up to my desk and say, are there any opportunities today? Let's see. And if there isn't any, after 10 or 15 minutes of analyzing my watch list, I just move on and just get on with my day, go do something else. So I got to tell you guys, like most of the things you hear on the internet about trading, it's all a myth. I hope you guys gain that from my content, not just this video, but all my previous videos where I've talked about this swing strategy. There are so many myths, and most of it is just marketing tactics to get you to buy into a certain program or trade in a certain way. It's all nonsense, guys. I'm telling you. It's all nonsense. I've been doing this for over 6 years now. I've achieved a lot in a short amount of time. So I'm speaking from experience, and I hope you guys can sense that as well. To wrap things up, I really appreciate you sticking around to the end of the video if you're listening to this right now. My goal is to provide as much value as I possibly can. I want to really leave my mark on this industry in a positive way, and not be one of those scummy marketing gurus that you're used to seeing, unfortunately, and that I'm used to seeing. This trading space needs a refresher, and I hope to be part of that. So thank you again for sticking around to the end of the video. Thank you for being a subscriber of mine. And if you're not, you know what to do. Go click that button. Make sure to like this video and comment down below if it provided you with any valuable insight. I want to hear from you. I actually read all of my comments. I try my best to respond to them and like them. But it does get overwhelming sometimes. But trust me, I do read all of them, and I read all of my DMs too, even if I don't respond. So please leave a comment below. Let me know how you felt about this video and about this trading style in general. I would love to hear from you. Thank you all for watching, and I'll talk to you all soon.